Welcome, PFXers, to the podcast for the week of June 9th. So we're just coming off of some very interesting volatility. In particular, I'm looking at the Euro-US dollar, which from a technical perspective, forget about what's going on fundamentally or in the news, is very exciting. So we've got the market bouncing off of long-term support here. It's been in place since March and has broken above resistance that was really set in mid-May. This consolidation pattern, if it completes, there's a couple of ways that we could project where prices are going to go. We could look at the previous run or the previous trend, and then project that same distance to the upside. I've actually had a little bit more success using a Fibonacci retracement. So I apply it to the top of the pattern, the absolute high of the pattern, to the deepest portion of the pattern, and then look at my Fibonacci projection levels, which puts me at one level, or at the 161.8% level at about 63.50. So the mid 60s could easily hit that in the short term. I don't think that that's unreasonable. The 261.8% retracement level, which would be about where the measured move, if we were looking at the prior trend and projecting that to the upside, that's about where that would be, is all the way up at 170. Now, that's obviously more speculative. I think the 161.8 is more reliable at 164 exchange rate, but I think we've got a nice opportunity there. I like this as a long opportunity. Could work out to be very, very interesting in the intermediate term. So maybe the next 6 weeks to 8 weeks. Well, the dollar CAD has been an unbelievably channeling instrument over the last 6 months, 7 months or so, popping in between about 9,800 and just over about 2.5 cents over parity up here at 1.0250. So we're sitting there again, and here's where we start to get into some of our news this week. We're sitting up at resistance, and we have a couple of things coming out on Tuesday. So on Tuesday we get, which is the 10th, by the way, we get the Bank of Canada rate statement, and overall, I think most analysts are expecting a cut from 3 to 2.75. So we'll see whether that happens, but I would anticipate that's going to happen, and is probably built into the recent movement that we've been getting since the Fed has been getting more hawkish. We've been seeing the dollar CAD really moving, as I think most traders are anticipating there's going to be weakness on the Canadian dollar from an interest rate perspective, and a little bit more strength than there has been from the US dollar, and so that's what's been driving us up towards resistance. Now, obviously, you always have to look for the surprise, but that's what we're expecting. I would be very surprised if that wasn't in fact the end result. The second thing that we're getting on Tuesday, however, is trade numbers. Now, this is particularly important, I think, for this for both the Canadians and the United States. So we're getting this information, which is important information. In fact, it's one of the principal factors that has a direct, not an indirect, but a direct impact on exchange rate values. So trade is one of those three big things that we really watch. In particular, it's important as it relates to the U.S. Canadian dollar exchange rate, because Canada's biggest trading partner is the U.S. and vice versa. So you get this. If we get a slowing of Canadian exports into the U.S., that could really push us up above resistance here, and that's the opportunity that I'm watching for. So despite the fact that we have oil prices at highs and projected to hit even higher highs of 150 in July, that we may want to look for that opportunity. So there may be two ways that I take this. Buying a break of resistance up here at 250 pips over parity, or for traders who might be inclined to sell the bounce to the downside, I might resist. So I'll wait until the announcement actually comes out, but I would not be surprised to see a decline in Canadian exports into the U.S. and to see that then offset any kind of benefit that the Canadian dollar may experience in over the next 6 to 8 weeks from higher oil prices. Now, shifting gears a little bit to Wednesday, we get labor in Australia. Now, the reason why I'm paying attention to this so much this time around is because of the shocking reaction we got to the U.S. NFP report on Friday. So, clearly the market was caught by surprise, all-time records, blah blah blah, ignoring the fact that the announcement is essentially meaningless. It's a nonsensical announcement that impacts the market. So traders are going to be hyper focused on this, and since labor data is coming out on Wednesday for the Australians, I would suspect that we're going to see a fairly solid amount of volatility there as well. Now, back in February and March, I looked at this pullback from late February to early March, and used it to once it had bounced in March and April, used it to project an upside potential up around 98.50, which you can see here. Now it's been slow going, I'll tell you that much, but it's been getting there slowly and surely. And recently, this week, we've got some encouraging signs. So it's interesting to see this little consolidation pattern, which I'm going to draw here, beginning to pop out. So Friday, we got not very committed movement here, but which makes this all that much more important to watch. See what happens on Wednesday, because if we get positive labor data, then we may have an opportunity to see a breakout to the upside and finally get that 98.50 profit target. So that's one I'm going to be watching very closely. I'm biased to the upside, clearly. That's the way that I'm looking for opportunities. I would not be inclined to short the Aussie dollar right now. With commodity prices on the rise and forecasted to continue rising, with good economic data coming out of Australia here last week, and again, although the payroll report may introduce some volatility into the market, even if it's negative, I think traders are going to brush it aside as more data comes out. So, could be an opportunity to go long if you're not already long, but I'm not worried about the downside. So, if we get a positive report, could be a nice new re-entry opportunity. If we get a negative report, it may be a wait and see until more data comes out. Well, speaking of channels, there's really it's tough to find a pair that channels more effectively or more long term than the Kiwi does here lately. So we broke out of one channel that had been in place for several months and re-entered another one. So we can see a couple of little breaks here in March, nudging those fences here in May and even in April a little bit. But and then this temporary break that we saw in May to the downside, the bottom part of that channel, was certainly interesting, but the market came right back up. We have bounced off of that level again here last week. On Thursday, we get retail sales in both New Zealand as well as in the U.S., which is one of those reasons, which is the reason I'm looking at the Kiwi dollar in this case. Now, it's happening Thursday, so it's really tough to say, what are we planning on from that specific announcement this far in advance. It's definitely one we want to follow up on in the near term. But right now, if we had to make a decision, I'd say that we're biased to the upside as we bounce up off of this lower support area. And by the time the Thursday release comes out, if we're near that resistance level and the report is positive from New Zealand, I would expect to see some highs here. I like the Kiwi, actually, despite the fact that we've got a downward trending channel. I like the Kiwi as a long opportunity, potentially, to take advantage of the appreciation in commodity prices. Growth in Australia is probably going to bleed over into the New Zealand economy as well. And just in general, dollar weakness that I think most folks are still expecting. So this could be the catalyst to knock this out of this 2-week downtrend that we've had from the upper level resistance down to support, and head us right back up to resistance and potentially even beyond. The reason why I'm so interested in this, of course, is that a breakout of a consolidation level is always a great trading signal. So if by the time the report comes out and we're getting a breakout of upper level resistance, so maybe something in the 78.50 or even 7900 range, that would be something to watch for. That would be a nice opportunity to go long the Kiwi dollar, and that would be what I'm looking for. I'm not really interested in shorting the commodity currencies these days. and am instead looking for opportunities to either enlarge a already long position or lift hedges off a long position or even re-enter a long position again as the market breaks out. And this is one I would definitely be watching for. Now, like I said, it's out all the way to Thursday the 12th. We're going to be following up on this as we get a lot closer to that announcement so that we can reevaluate our analysis and make sure that our bias is still to the long side. If the market's broken down to the downside, obviously we're going to have to reevaluate a little bit. So we'll be back on the site every day following up on these announcements coming out this week. Should be actually a pretty big week for volatility, especially with some overflow volatility surely coming from last week as well. So should be a good week trading. We'll be back on the site with technical and fundamental analysis every day.